All right, we've got less than 15 minutes till market opens. I've been out of the game for a minute, but I'm feeling good about this. I saw a gap fill yesterday. We just filled it. So let's trade NQ micros and see what we can make of it. Yeah, look, 1 day time frame, you can clearly see that gap. Price just filled it on NQ. Also filled it on ES. Let's just drop to the 4 hour. That's the highest time frame we'll work with, and mark any high time frame confluences. I see this 4 hour bullish fair value gap right here, which I will just mark. That's it. We're just going to start by marking all of our high time frame key levels, zones. That will help us visualize where price is heading. We've got a bearish fair value gap right there. We've got an intermediate high right here. Again, an intermediate high is the highest high within a bearish fair value gap. And then an intermediate low would be the lowest low within a bullish fair value gap. So we've got that bearish fair value gap right here, 3 candle sequence. This is the highest high within that zone. Bunch of gaps over here. This could be considered a breaker block where price could very easily come down here, retrace, and then continue bearish. But the only reason why I wouldn't bank on that is because we have a gap right here. So we could very easily sweep that gap. A lot of people enter shorts up here, but then get ran straight through because we've generated more liquidity from filling the gap than we have from testing a potential breaker block. So I wouldn't mark that at all. That's all I see on the 4 hour. This would be considered a 4 hour intermediate low as well. We have this bearish bullish fair value gap, candle 1, candle 2, candle 3, the lowest low within that bullish fair value gap. That's our intermediate. So we've marked some key levels. I'm not going to mark any of these gaps since they're two massive ones. This one, first of all, there's still 40 minutes till this candle ends. This candle could turn bullish and this gap be absolutely disregarded, not even exist. So this would just make it one gap here, but this is a continuation sequence right here. You see how no candle body in the first or third candle close within the wicks of the second candle? Just 3 high volume bearish candles, that's continuation. That also kind of tells us that the fourth candle might continue pushing. It might not sweep because we've just generated so much momentum from these 3 bearish candles that the likelihood of this one sweeping may not be as high as if this one was had less volume. Let's just go to the 1 hour now. On the 1 hour buy side, I do not see any bullish confluences aside from what we've marked on the 4 hour, so I'm going to leave that. We have London highs here. I will mark a few of these gaps that I'm seeing on the 1 hour, only because it coincides with another high time frame confluence. For example, this gap right here is resting right above London highs. So not only are we generating liquidity from London highs, we're also generating liquidity from the fair value gap. So I will mark that. Boom. This one looks more continuation, this gap here. Look at these 3 candles. This one, however, these 3 candles with this gap, that is a clear 1 hour bearish fair value gap. And that is kind of making me flip my opinion on there being a breaker block. Although the breaker block is not here, we do have one right here. We do have one right here, and we could enter that bearish fair value gap, sweep previous day low, which also ends up being a breaker block, then continue our downtrend. So just to help visualize, we could do something like this. you know? It's possible. It's just good to visualize the different scenarios that might play out. Less than 10 minutes to market open. Trying to see if I'm missing anything. So I like to treat gap fills, so gaps basically, but I like to treat, like when the market fills a gap, I like to treat it with the same amount of strength as a high time frame SMT divergence. And we know that an SMT divergence is when one of the pairs makes a lower low while the other makes a lower high, or one makes a higher high while the other makes a lower high. That SMT could mean one of two things, which we know. It could mean that we are continuing in the dominant trend direction, like that SMT is used for price to resync and find its equilibrium, which goes in the direction of our daily bias. Or it could mean that that SMT, in finding its equilibrium, is going to retrace to a certain medium or high time frame confluence zone and then continue in the dominant direction. So SMT could mean slight pullback or it can mean continuation. It just depends on the context of the market. In either case, it does move price a good bit. The same way a gap fill, right? That's the same way I'm treating it, right? A gap fill, filling this could mean we're sweeping and we're continuing in the dominant trend direction, where if you look at the market right here, I mean, we are pretty bullish if you're looking as far back as, June 10th. But we do have a lot of bearish confluence, which means that price could sweep this for sure. I think the fact of the matter is that most likely at this level, once market opens, once 9:30 a.m. opens, price will go up. The question is, will it go up all the way? Or will it simply pull back, enter one of these bearish confluences, and then continue in what would be considered the dominant trend direction if we're looking as early as, Monday, yesterday? And I'm honestly banking on that more. The fact that we'll just pull back and then we'll continue in the dominant direction. The reason why is because we have these bearish zones on the 1 hour that are also, it's like an inflection point with these breaker blocks. Like this 1 hour breaker block would be considered, it's the wick of the lowest candle that we broke. So it'd be considered this entire candle. And this entire candle, price could very well at this point pull back anywhere in this zone and then continue bearish. We also have somewhat of a breaker block right here where price could pull up to this fair value gap and then continue bearish. So it's a little tricky, but then at the same time, we've just swept previous week low. There's a lot of liquidity at previous week low. If market wants to find a balance again, it's going to want to maybe at some point, once the main move happens at 11:30, like post 11:30 and 12, right? Because high liquidity is prior to that. Once 11:30, 12 p.m. hits, I'd expect price to rest somewhere in this zone. Since we've just taken out previous week low, I don't know how much lower we want to tread. So, I mean, there's a good bit of information telling us that the market can go either way, but what I haven't done yet is make a Fibonacci tool or a Fibonacci retracement from this uptrend to where we've had this pullback, and then that will kind of tell us what the ideal zone is. See, That's what I'm saying. Right now, we're in the perfect range for a continuation bullish. We're in the perfect range. I would say 50% and 61.8% range. These two green zones right here. That's a good level for price to then continue in the dominant direction at. Then again, that's the question. Like, the dominant trend direction is relative to what? Is it relative to yesterday's price action? In that case, the dominant direction is bearish. It's very clearly bearish. If we're looking on a weekend basis, then it's bullish, right? A week, 2 week basis, that's bullish. So it's a little tricky. It's a little tricky to say. I would think that if price takes out this intermediate low, I don't know how much fuel we have for us to take out this low and then continue to take out, like, let's say previous day low or previous day high. You know what I mean? Because at that point, that would be a pretty deep pullback for us to take out those highs up there. That would be really discount. It's still possible. It's still possible, but I just don't know how much I would believe that. So let's just make sure we have a minute till market opens, that we've marked as many high time frame confluences on the 1 hour as we could. I guess this can be considered an intermediate right here, sweeping previous day low, right where that candle was. As long as we see a confirmation, we can for sure take shorts over here. Because we have a fair value gap right here. Let's check 30-minute. Anything on the 30-minute? Even over here. See, I don't see anything on the 30-minute there. I wouldn't look at 30-minute on the sell side because we have enough to work with on the 1 hour. Now might be a decent time to compare this to ES. So I'm just going to pull up ES here and compare it on all the high to medium time frames. ES also filling that gap. I will mark the very high time frames on ES. Just because it also helps us understand which zones ES has entered, where NQ hasn't, so I will mark that. Okay, let's check the 1 hour for ES and NQ. Okay, let's check the 15-minute. Actually, let's check 30-minute. Oh, market just opened. Okay, both have taken out London lows. Both pairs are in sync right now. They're both in sync. What I will say is that in pre-market, we had a bearish SMT divergence. Look how it's on the 15-minute only, so I wouldn't put that much emphasis on it. But you see how ES took out that that 6 a.m. high, whereas NQ did not. So that could mean that price is pulling back into a discounted zone for us to then continue in the dominant direction, which is bullish. It's a possibility, right? So it's just important for us to mark that that could happen. But at this level, at like in this kind of gray area where we're just moving bearish, there's nothing really we can do. We don't want to try to convince ourselves that taking shorts at this moment or taking longs right now is the correct move. So we'll just wait it out. I'll pause and we'll resume as soon as we see price return to a key level. So one thing, because it's already been 15 minutes, it's about to be 15 minutes till market open. We have this bearish fair value gap here. Remember, we had this SMT, ES made a higher high. Both pairs pulled down, swept the low of the low prior to market open. And if after this 30-minute candle ends, we end up breaking this bearish fair value gap, meaning if this candle body ends higher than where these candle bodies opened, where the bearish candle opened, if it ends somewhere anywhere higher than that, so just for visualization, if at the end of the 30 minutes and at the very end, this can't happen before, I need to see how the candle looks at the end. If we have a candle body closing higher than this bearish candle in this bearish fair value gap sequence, that will tell us that we've inversed a bearish fair value gap after an SMT divergence within a gap fill, while both pairs have taken out pre-market liquidity and have ended in a high volume bullish candle that has taken out this bearish fair value gap, like I've said. If I see that, I would be comfortable in taking longs. There's no guarantee that I will, but I would for sure consider it. The problem with that is we have a 30-minute bearish fair value gap here. So we have an intermediate high on the 30-minute and the 1 hour, which also ends up, you know, being in the same zone as this breaker block, the candle that we broke in this downtrend. So there's a lot of liquidity there, right? There's a lot of liquidity there because think about it, right? A lot of people treated this uptrend and this key level as support, so they entered buy orders here. Not only that, a lot of people clearly entered buy orders here and maybe thought that we were going to take out these highs, but we didn't take out these highs. So they're still in their position even down here. They're still in their buy positions. They're in the negative, right? They were up who knows how much, right? I'm talking like hedge funds, financial institutions, like they're up tens of hundreds of millions of dollars entering their buy position right here. Now they're in the negative, but they have a lot of money. They haven't sold it yet. The smart thing for them to do would be sell it at break even, which would be at this level here. So if they're in buy orders there, how do you go break even? You sell over here. So not only do we have this intermediate high within a bearish fair value gap, but institutionally speaking, they would want to sell there to make their position go to break even. Now, if what we're talking about was a little bit higher, like if this breaker block was up here and this intermediate was up here, then I would for sure take longs at this inverse fair value gap break. But the thing is that the point differential from us breaking that inverse fair value gap to this intermediate high, which is also inflicting with this breaker block, that is only 62 points. That is not enough for me to take a position. I would have to leverage a lot, and I'm just not that confident in price even reaching this intermediate. So, with that being said, I don't think I would take longs here. I think I would take shorts. I think the daily bias is bearish. That's the daily bias. If I'm looking way too macro and I'm setting up a Fibonacci tool, like the Fibonacci tool could be valid, but remember, if we're looking at the 4-hour time frame, price could come up here or could come right here, pull down, take out this low, and then continue our uptrend, right? Let me just mark that again. Hold on. Price could come up here to our breaker block, take out this low, and then continue our uptrend. Now remember, even that low, even us taking out this low, we're still within very clear Fibonacci, like high probability territory in this 50% and 61.8% range. However, look at the point difference from where we would take our short here, targeting this low. That's 317 points. That's plenty for us to take a position. We could actually undersize. So with that being said, I do think we will be taking shorts if the opportunity presents itself. I don't feel confident in longs at all. And until price kind of reaches this zone, we'll wait it out. Something else that is telling me we should go bearish is the 4-hour ends in 7 minutes. This candle body is for sure closing within the wick of the second candle right here. That is going to be a massive bearish fair value gap that there is a high probability of us entering, generating liquidity from the fair value gap, from the intermediates on the lower time frame that we marked, and from this breaker block of the candle that we just slammed right through. That is plenty of liquidity for us to continue bearish, but we still have some time. ES has already taken out this previous week low, so now we'll just wait. I'll look for an SMT, see if one of the pairs has entered a high time frame confluence, and then the second we see an inverse fair value gap break, meaning the second we see us inverse a bullish fair value gap, I'll know to take my shorts. So if we compare this to ES right now, let's just go to the 5-hour, for example, or sorry, 5-minute. You know what, 15-minute. ES, NQ has not taken out London highs, whereas ES has. We are within an intermediate high in a bearish fair value gap on the 30-minute and the 1-hour. We are in a 4-hour bearish fair value gap right now. Of course, candle body looks very bullish, but I would still consider an SMT in regards to the London high. Now, I could look for, 2-minute inverse fair value gap. Let's take out that low. Or I could switch my strategy here and think macro in the sense that we entered the Fibonacci golden zone. We have swept the gap with a very clear bullish candle, and that this bearish fair value gap might not even carry out. It's possible. It's very possible. With that being said, here's my logic, until we take out London high and I see how we respect this bearish fair value gap and the sweep of London high, I will not be entering longs, not at all, right? And I think that if I see, a 3-minute break of this inverse fair value gap, I'd be pretty comfortable in taking shorts. The only problem with that is this London high is using an SMT in respect to London high, a valid SMT divergence. And that I can't answer confidently, but I would think so. The only thing is there's a lot of contradicting factors. There's a lot of stuff telling us bullish, there's a lot of stuff telling us bearish. I will lean more towards bearish. I think part of what makes me feel bullish right now is just seeing how the market is treading. And, a slight bit of fear of missing out, but we can't trust that. We have to trust the technicals of what we know. And I think there's a decent chance that we're bearish. I'm going to look for the highest time frame break. Ideally, I'd want to see this 5-minute, but I probably won't be able to. We're going to wait it out. Okay, well, on the 3-minute, looks like we're respecting it. 5-minute, we close that gap right here. So the gap we'd have to consider is for price to pull back all the way down here. But the reason why I think bullish is because on the 30-second, we have a clear inverse fair value gap break. So this could very well just keep on pushing. I wouldn't be opposed to taking longs, but it's just that the point difference from here to there, it's only 73 points. I just don't know how confident I am in that carrying out. 73 times 2, 150. Yeah, I could risk 3 micros and it'd be fine. Just look at the way it's reacting right here. Sure, on the 30-second, we have a strong bullish candle, but on the 1 minute, we don't, right? I'm going to trust the higher time frame. Keep in mind that ES has just entered that breaker block territory that NQ has been entered, right? ES just retraced back into this level. I would be open to taking shorts right here. I would be. Just don't feel as confident taking that. No. Today might be a no trade day, which I'm comfortable with. A lot of conflicting factors in today's trading day, so I'll give it till 10:30. If I don't see anything, I'll probably abandon, and I'll just quickly take a peek around 11 later and see if there's any last minute move. And if there isn't, there isn't. I'm okay with not trading on this trading day. All right, let's wait it out. Okay, I like this for shorts. 15-minute time frame ending in a minute. 1 hour time frame coming to an end in 30 minutes, but the 30-minute time frame is coming to an end in a minute. Now, that 30-minute looks like it's sweeping that intermediate high pretty well in that bearish fair value gap. Just to help you visualize that this is that bearish fair value gap and this is that intermediate high. This candle right here, this 5 a.m. candle is the high within that. And now we've just swept that while still candle body closing under the second candle in that fair value gap sequence. 15-minute closing in 45 seconds. I would say I will enter short positions confidently if we have a candle body close, a 15-minute candle close below this candle right here. That will make it easy for me to take that short. For sure, because NQ still has not taken out London high, whereas ES has. That's still an SMT. And if we see an inverse of a bullish fair value gap on the 15-minute time frame, where we'd see the 30-minute candle body close within the candle in this bearish fair value gap sequence, that's enough for me to take a short. So we'll wait on that. All right. We had that inverse fair value gap break. Oh, not up there, man. I need to sell market.
Order filled.
Okay, there we go. If you look at it on the 15-minute, we broke that structure right there. Full candle body close on the 15-minute, clear as day. On the 5 minute, that's really it. This was the main 15-minute fair value gap that we inversed. So we're gonna go for a 1-to-1 ratio. First, let me check point differential from where I entered to this candle right here. 120 points, 120 times 2 is 240, 240. So 500 divided by 240, that's 2. So technically I should have only risked 2 micros instead of 3. That's kind of the math I do on that, if I'm looking to risk no more than 500 on the day. But that's fine. We are risking 3. So right there. It's giving us a 2.5 to 1 risk to, no, sorry. It's giving us a 1.3. Perfect. 1.3 risk to reward. And now we'll just wait on that. And I'll resume when we're close to my stop or TP. Very close to our TP. These lines I have drawn kind of tells me my, like at what percent of the way are we from my entry to my TP. So this line right here is 80% of the way through. So I just made a rule in place for myself that I highly recommend, and it's that if price hits 80% of the way to your TP, bring your stop loss to break even. Because chances are that if you reach 80% of the way through and price ends up reversing and it hits your break even point, but your stop loss is still higher, it will most likely run through your stop loss, or by the time it even reaches that break even stop loss point, a lot of time will have had surpassed in the market and it'll be close to 11:30, which I like to get out around. So that leads me to my second point, is that 11:30 a.m. is my cutoff point. Any position I'm in by 11:30 a.m. I will sell. That's because 12 p.m. is a little more choppy, lower liquidity. So I like to get out 30 minutes before 12 p.m. hits. And I found that working out pretty well. Because once that 12 p.m. hits, I mean, who knows how the market will flip. Sometimes it'll carry out the positions. A lot of times, more times than less, it will end up running through your stop loss. So I would just recommend taking TP once 11:30 p.m. hits and moving your stop loss to break even once you're 80% of the way through your TP. So we just hit 80% of the way through. We're gonna move our stop loss to break even right there. And we're gonna give the market the extra 12 minutes that it needs before 11:30, and I'll resume once we hit TP or our stop loss. Order filled. Honestly, a difficult trading day. We had to wait till 5 minutes before I would exit all my positions any day of the week. And our entry was at 10:45 a.m. That's a pretty late entry. Usually I'm entering no later than 10 a.m., maybe 10:15. But that's kind of the takeaway of this video, is that if you don't see your entry within the time frame that you usually trade, that doesn't mean you just take a trade anyway, right? You wait it out. Worst case, you preserve capital, which isn't really a worst case. That's a solid case that you preserve capital and you don't trade at all. Because think about it. If you just preserve capital, as opposed to you losing the entire risk you allocated, to go from losing and then trading the next day, you'd have to make $500 more to even match what you had the day before, and then 500 more on top of that to exceed it. So don't do that. Just be patient. Don't take the trade if you don't see it. But it worked out for us. I knew that the bias was bearish. I'm glad that I didn't take longs somewhere here. We actually ended up having a small like 1 minute time frame head and shoulders pattern right here. And it ended up working out. The main confluence was this 15-minute bearish fair value gap that we slammed right through and immediately entered shorts there. Didn't really wait for this pullback. The second I saw that candle body close, I entered shorts, and I targeted this low right here. 1.34 to 1 ratio. Simple.